about stocks this week. The Nifty holds on to 8200. GST hopes improve sentiment. We'll tell you what your investment strategy should be. With the new year around the corner, we give you your investment strategy for 2015, and Prakash Diwan will tell you why you should be investing in Sudarshan Chemical for the long term. Welcome to All About Stocks. Thank you so much for tuning in. I'm Faye D'Souza. What a week it has been. I'm going to pull up that weekly chart for you. Look at that market seesaw. But it's clear, really, as we watch it now over the weekend, that what we need to do in this market is take advantage of the opportunities like the one we saw earlier this week to buy into stocks. On this show, we're going to look for stocks that you should be adding to your portfolios to make you rich over the long term every time the market gives us one such opportunity. We'll also answer the questions you sent in during the week. Remember, email ID at the bottom of your screen. You'll find a copy of the show on our Facebook page, and you can reach me on Twitter. First, let me bring in my colleague Ajay to give us an update on all of the action in Dalal Street this week. Ajay.
Well, Faye, the market this particular week or past couple of days was nothing short of a roller coaster ride. There was a sharp correction and then smart rebound. On a net, the benchmark indices ended flat. Broader markets had it a little more drubbing and was losing out. Even on a weekly basis, we lost about 1 to 2% on the broader markets. But the smart rebound, which we saw on the back of global cues, at least got the benchmark indices back to flat levels for the entire week. The main trigger point was the global markets turned pretty resilient after the US Fed commentary. US Fed clearly said that they would be patient as far as hiking rates in the US economy is concerned. That led to a lot of covering of short positions in the global markets. We also covered a lot of short positions which got created. Remember, from the recent highs last couple of days, we had almost corrected 6.5% on the benchmark indices. The bad part is that despite this covering in the global markets and the Indian markets, the FII selling just continues this particular week. Almost every day, FIIs have been selling 600 to 800 crore. DIs have been buying almost two-thirds of that, but have not been able to make up for all the selling which FIIs have been resorting to. Well, there have been some positives by the winding up of the week. On Friday, there was progress on the GST front as well. That would be taken up positively next week. So some progress on the reform front and a dovish Fed led to rebound in the markets. Going forward, it will be the expiry of the last series of this calendar. So traders do expect some volatility to remain. They are not sure whether we will be able to scale back our recent highs this particular year itself, but still are calling this market as a buy on dips. Not only that, apart from that, global cues is something clearly to watch out for very closely, and it could turn out to be a listless kind of a market for the next week. Going forward into the new year, it will all be the rumblings coming in from the North Block, especially related to the budget, which market will take further direction from. But this week, it was definitely a roller coaster ride.
All right, Ajay, many thanks for that update. Joining us in the studio today, Prakash Diwan, Director at Altamont Capital Management. Prakash, thank you for coming in. It's always such a pleasure to chat with you. Leaving aside what happened in the market this week and the seesaw that Ajay was just talking about, we'll come back to that later. What are your big hopes and expectations from 2015?
I possibly see 2015 as a year where a lot of hopes will translate into reality, especially on the development side. The government's promised quite a bit. So those Achhe Din finally should happen. That's one. And I think generally with growing standards of living, we should also see a very major change where people will start following more higher end goals rather than just making money and things like that. I mean, that constantly keeps on happening, but I see the right kind of conducive environment for people to seek peace, good health, happiness, and I hope that works well. Every year we think about it, but the markets are going to be in a good state. We are in a sweet spot of sorts. Globally, things are just getting tougher, and India continues to emerge as a great spot to be in. So you could be in the right time, right place. And if that works out well for you and your portfolio, probably the next few years you'll make the maximum amount of money that you never made earlier.
All right, so my big takeaway is that we are going to hope for a year where we have peace and good health and happiness, especially in the country. But coming back to the markets, the Sensex gained about 30% in 2014. A lot of that was FII money.
Yes.
Do you expect the FIIs to be as interested in us next year as they have been over the last 1 year?
Absolutely, and could be more, because we could have a full calendar year where the interest could continue. Last year, 2014, has been more in the second half of sorts. The first half was just normal. There's nothing much happening. And what could change is the quality of money that will now come into India is going to be much more resilient. It's not going to be hot money. And you'll see a lot of money come through the FDI route also, which hasn't happened in 2014 as much. So 2015 could probably be a year where serious money comes into businesses from markets, from countries like Japan and all, which have always been wanting to do that. But we're just kind of making ourselves more and more attractive and conducive for that.
Let's talk about GST. There was a lot of buzz about GST right through this week. Towards the end of Friday, the finance minister came out and said the central government will compensate the states for revenue loss in tranches. How important will will GST be in the coming year? How much of this positive sentiment hinges on the government being able to push this through?
No, a lot, because that's one of the key promises that they made in the manifesto. It changes the way companies do business currently in our markets. Today you have a lot of issues with companies wanting to set up production units where there's no market, and you move the stuff all over the place because it's tax advantageous to be in a particular state or something. And this GST will enable manufacturers to get closer to the consumer. And that means that the consumer benefits out of this at the end of the day, without taxation becoming too heavy for the state. And what the finance minister has been trying to explain to the states, and of course it's not so easy doing that, is while you compromise on the rate of tax that you get, you actually incrementally, you are in an advantageous position because the volumes of goods would grow. Which is what the states need to accept. But it's only the progressive states who are confident of leveraging on the growth who would accept it so readily. The other ones which are in the comfort zone might take some more time.
All right, so just give me a strategy now for the viewers who are watching at this point, going into the new year. And the reason why we're doing this early is because, a lot of people are just going to switch off for the next 2 weeks and come back.
They should.
Maybe they should really. Come back after the 4th. What should they be doing, starting then when we get into the new year? What sort of strategy should we have when it comes to our stocks?
See, I think one of the biggest lessons this year has taught us, and just while it's kind of turning the corner, is what you mentioned. People need to be ready with their checkbooks on bad days. They still don't do it. I mean, I personally spoke to a lot of our clients and investors about having to invest 3 days back. The Nifty at sub 8,000 levels. The stocks which have had nothing to do with the global meltdown, and available at 10% discounts, and you still don't want to buy it because you expect that the next day could be even lower, and that never happens. It's extremely difficult and almost impossible to touch the bottom, to cash the bottom. So you need to make sure that you like a stock, buy it at every dip. Now that every dip could be perennially also troublesome because something could keep on falling. So you have an appetite. Just break it into 4 tranches, and even if the time between the 3rd and the 4th tranche is 6 months, don't panic.
But tell me this, if I were to ask you for 4 stocks right now to put in your list of stocks to buy every time there's a cut in the market, what would those stocks be?
Yeah, so you would need stocks which also have a longer trajectory of growth and which is very clearly visible and assured of sorts. The first one would be Reliance Industries, because it's a stock that doesn't really have weekly moves or triggers that keep on changing every quarter. Quarterly maybe, yes, because of the kind of expectation of numbers, but otherwise it's a great story which will take a long time to do. You buy into an HDFC. A lot of people don't own HDFC. If you see, the institutional investment in HDFC is much more than what retail investors have. Right? I mean, very clearly that people need to buy HDFC every time it goes down. There's nothing wrong with the company's business model. It doesn't keep on changing every day. And housing finance is always going to be a positive growth area for us. You could buy into the auto sector. I mean, some of the companies that I like currently are Ashok Leyland and Mahindra. But Maruti also is a great pick at any dip. Disclaimer is I also have a long position from the IPO days in Maruti. But it's a stock that could fit into anybody's portfolio. You buy it at any dip, it will keep on growing because the company itself is so dynamic. It's not got some ceiling that it's kind of touching. And the same way from the technology space, I think there's some very smart companies, HCL Tech, for instance. It's on a roll. It's been on a roll for the last 4 or 5 years. I think it still has some very good years ahead of it.
Very quick question, and a lot of investors would ask this. If I have HDFC Bank, should I also have HDFC?
Yeah, I mean, the profiles are very different. The earnings profile where HDFC Bank is much more diversified, is much more fee-based, where HDFC is a completely fund-based activity. So they're very different.
All right. You must have HDFC in your portfolio. Quick recap. We talked about RIL, HDFC, Ashok Leyland, Mahindra, Mahindra Maruti, and of course HCL Tech. Report card. It's time to pull up Prakash's report card. Prakash recommended Gujarat Pipavav Port in February 2014 was trading about 70 rupees with a target of 100 rupees. That stock is currently at 167. Prakash, you have this stock in your portfolio as well. Is it time to book profits, or do you think it makes sense to hold through that beautiful picture of 2015 that you just painted for us?
Yeah, you could because this is a stock that has benefited out of the expansion that the company did at a very low cost. As I mentioned that time, also the return ratios are very favorable. But I would believe the company would have a little bit of a pause till exports pick up, and I'm not anticipating exports as an orientation to be very strong in 2015. It'll take at least 2 years for us to get ready, where all our ports are abuzz with activity and things like that. But the company would continue doing above average growth, but not those super growth that it saw in the last 6-8 months. So you could see a pause, and I would believe if people want to book profits, have an attractive opportunity to look at elsewhere, I won't really shy away from that.
All right. Now Prakash has brought us another recommendation. He's been kind enough to pick a stock for us this week. Sudarshan Chemical Industries, that stock ended the week at 118. Tell us why this stock makes your list at this particular time.
First, let me tell you what this company does. This company has been around for almost 20 years. It's just listed on the BSE, so people probably don't know much about it. Initially, they only focused on the domestic market. In the last few years, 3 years, that they basically are into what is called high-performance pigments, which goes into inks, paints, coatings, even cosmetics. And for the last few years, they've been struggling to get through in that market, which is extremely quality sensitive, particularly the European markets. And now they've had some very good breakthroughs within the cosmetic segment. It's extremely high-paying, good margins, great value. Having tried so hard out there and got this breakthrough, I think the top line growth is going to be phenomenal. It's already, the market cap is about 900 crores, so it's a decent size. The company, the management that runs it know the business very well. They've been into this business for a long time. It's not another business that they have. And, this expansion, brownfield expansion they undertook, I remember 2-3 years back, cost them quite a bit because of the high debt at that point in time. They borrowed at almost the highest rates in the last 5 years. Now that the company has become a net exporter, it has the eligibility to borrow in the ECB form, which will bring the costs down. The margins will improve. And, just to give you some numbers, last year they clocked an EPS of 50 rupees. The stock's available at 120. So it's just not even 2.5 times. This year, first half, they've already done 40 plus on EPS. So even if you try looking at the numbers, it really adds up. It's going to be, it has the potential to be a multi-bagger for sure.
All right, so that's Prakash's recommendation for this week. It's time for us to take a quick break, though. But stay tuned. When we come back, we'll take a look at Prakash's own portfolio. We'll talk about stocks like Tata Steel and M&M. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Diwan is still with us. We're trying to figure out our long-term portfolios, and Prakash was kind enough to design a portfolio on this show on the 30th of November 2012. We've been tracking that portfolio ever since. I'm going to give you a list of the stocks in his portfolio: Gujarat Pipavav, Tech Mahindra, RIL, Cipla, Coal India, ITC, M&M and Tata Steel. Prakash, in this portfolio right now, Gujarat Pipavav and Tech Mahindra are doing really well for you. I want to ask you about Tata Steel. Since we have been through an entire year where commodity prices were taking such a heavy beating, going forward, if the government does put all of its infrastructure plans in place, if it pushes housing like it intends to push housing, will we see a massive change in these commodity stocks as well? Or are we entirely dependent on what happens across the globe?
No, I think it's very clearly a domestic consumption story as much as the overseas impact that you have. In fact, the overseas cues are more sentimental in nature. Soft iron ore prices would benefit a lot of these companies, to be honest. But most of the companies in India are dependent on sourcing their own iron ore from the mines. and that's why they've not got the advantage of the lower iron ore price. It's like a transfer pricing issue where you keep on calling the input at a lower price, but you actually still pay the same thing. So Tata Steel, of course, has had its share of ups and downs, but I think the moment the consumption pattern changes and the moment you have cap goods taking off, they'll be the first to get off the blocks. And the moment an L&T and a BHAL take off, you will probably start feeling that, even the cyclicals like Tata Steel and all take off. So I don't think there's much to wait for that. And it's a great story in the making. They have great capacities, their margins will come back, top line growth will happen. So I'm not too worried about, yes, the performance has been a letdown because the last few years have been like that. But that's fine, I'll still live with it.
Add more at this point?
Maybe not, but the other sectors which would take off first are where you would add more, rather than cyclicals. Within cyclicals also, metals is probably second or third tier.
All right. We're going to do a quick recap of the stocks in that portfolio. Remember, we talked about Gujarat Pipavav Port, Tata Steel, Tech Mahindra, RIL, Cipla, Coal India, ITC and M&M. Just quickly take some questions as well. Dipali Verma has written in, she has 2,000 shares of SpiceJet, which she bought at 21 rupees, and 1,000 shares of South Indian Bank at 26. Should she hold on to both of them? Let's take a look at SpiceJet first. That's going to pop up on your screen. End of the week at 15 rupees. A lot of turbulence, so forgive the pun, in that sector altogether. And SpiceJet in particular, what should she do?
I don't know whether she could carry that kind of a risk, but if she were to add a bit more, I know it's a high beta trade. Usually I don't recommend this, but given the way the entire airline sector is poised for some dire help from the government, and I believe it would get, Spice could actually move to the 20 rupee level also. It's not unthinkable. Which it still means a 33% upside from where it is. But if she were to average out at these lower levels, every day it's either given you 10% down or 10% up in the last few days. Yes. So a couple of those down days, you buy it, your average could dramatically come down from 21 to maybe about 17, 16. And then you could make some money also.
All right. So, would it be fair to give her this advice then? Say, Dipali, if you are the kind of customer or the kind of investor who can take a risk like this, then go ahead. If you're not, then wait for an opportunity like we saw on Friday, where the stock reacted, and get out at a point where you get a slightly high increase.
Absolutely. I mean, she could have actually made a lot of money also some time back when it went up beyond this level. But people, continue moving their targets, and that's exactly why you get stuck with such stocks. But it's a stock that could still deliver. I don't think there needs to be any disappointment.
So if viewers who are watching right now, I'm sure plenty of people have SpiceJet in their portfolios, and they're thinking, oh, is this going to go the Kingfisher way?
I don't think so. So a categorical no on that. A lot of people have asked me also, as if, Spice is only going to follow the same footsteps as Kingfisher.
South Indian Bank, what would you rather have her do with that stock?
I think this is a bank that always comes in the news for the M&A buzz, but loses steam very quickly. I really don't like too much of this small banks which have nothing else to offer. So I would be out of it.
Be out of it entirely. HDFC then, as an option?
Oh yes, any day, any day.
All right. So get out of that South Indian Bank, move into HDFC. That's Prakash's advice. Let's take another question. Rajan has written in 50 shares of Alembic Pharma, which he bought at 330. He shouldn't be complaining. Alembic Pharma ended the week at 423. There's been a lot of talk about acquisitions from this drug maker. Hold on to Alembic Pharma?
Yeah, absolutely. I think they are going the same way as the Cipla did in terms of consolidating their presence globally. You use your strengths, even if they are just a couple of drugs, couple of names, brands, but go across the globe and, sweat it out. And they've done that with North Africa as a big market, which has opened up for them. They haven't done much in Europe and all, but that's fine. I mean, Africa itself offers a great sea of opportunities. So they'll continue to grow at phenomenal rates.
All right, we're going to take a very quick break. When we come back, we'll discuss another portfolio sent in by one of our viewers, stocks like L&T and SBI. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Prakash Diwan is still with us in the studio. We're talking about our long-term portfolios. It's time for us to take a look at the portfolio of our one lucky viewer. This week it's Sneha Patel. I always feel very happy when I get an email from a woman investor. She says that she has these stocks in her portfolios. This is just part of her entire portfolio. She wants to know which ones of these stocks should she hold on to and which she should sell. Right on top, 20 shares of L&T, which she bought at 1078. She's making a profit on that stock, but this is certainly not the time to exit L&T, is it?
No. In fact, our entire portfolio, I'm very happy when I see women investors make this kind of money. And I think they are much smarter at stock picking anyways.
I'd agree.
Very readily so, yes. No, so our portfolio is very well balanced. It's got just a couple of small caps, which are also quite favorable in terms of momentum. Otherwise, it's a predominantly large cap portfolio, which is the way to go about when you have a less number of stocks in a portfolio kind of a thing. So L&T, I believe it's on a roll. It could probably be, as I said, the first beneficiary of this cyclical upturn.
Yeah, 55 shares of PTC India, which she bought at 56 rupees. It ended the week at 93. So this whole change we're seeing now in that entire sector is going to continue ticking through the new year.
I think it's just the beginning. It's not, you need to ask yourself a question. Has everything been done to change this sector? And if the answer is yes, everything's over, get out of the stock. But if you feel the answer is no, it's just beginning to happen, there's no reason why you need to move out.
All right, next 5 shares of SBI, which she bought at 164 rupees. This is when we were telling people to buy SBI at 164.
Yeah, so it works out of what, $300 less, just about 3 plus, right?
Yeah.
The split in this thing. Today, if you see SBI, it's not only outperformed the rest of the banks, which is very heartening to see a large PSU bank come to the fore. It's already actually matching ICICI and Axis in terms of the growth it has given to people. I think SBI, again, is a proxy stock to the entire change that's happening in the core sectors. And what could probably slow down a little bit of growth on the stock price is, once NPAs start kind of coming back to the fore. But I think they'll get over that also because they've been very resolute about attacking that area. The management has been very serious. And what I like about the new current management of SBI is they're extremely realistic.
Yes.
There's nothing pompous about the growth plans and trajectory. Everything works like in a very real situation. So SBI could be definitely a hold for the long term.
Syntax also she has in her portfolio, which she bought at 35 rupees. The stock has moved up very, very sharply in the last few months. Hold on to Syntax though going forward?
I think this is where she could book some profits. I have a reason for that. Syntax has grown on this expectation of the Swachh Bharat helping it in those ready-to-use toilets that they have and stuff like that, which is slightly too simplistic a conclusion. So she could book profits out of that possibly.
Should she exit it entirely or just take her profit home?
She could. I mean, Syntax has done great for her. It's almost like 3 times. She would probably move into Sudarshan Chemicals or something that you discussed. All
right, last one share, 42 shares of Tata Motors, which she bought at 373 rupees. Look at that stock go. So she's doing really well on all of her stocks. Sneha, we're so happy for you. We hope your new year continues to be just as good. But hold on to Tata Motors?
Yeah, she could. Of course, there are enough cries about JLR also struggling in China because of the slowdown in China. But I think it's a good company. She's bought it at very low levels. She could still ride the game.
All right. Unfortunately, we've come to the end of the show. But Prakash, is there a disclaimer you'd like to give us?
Out of the stocks that we discussed, I think the one that I hold is Maruti, which I mentioned. The rest I don't have in my personal portfolio, but we do keep on advising our clients upon these stocks.
All right, so that's Prakash's disclaimer. Prakash, thank you so much for joining us on the show, spending time with you. It's always a pleasure to have you in the studio. Remember, very special 2-part series of our year-ender coming up next week. Ramdev Agarwal, Rashesh Shah, Dhirendra Kumar, all in the studio giving you advice on how to pick stocks, how to invest, and how to get rich. Enjoy the next 2 weeks. Of course, Merry Christmas, Happy New Year to you. We'll come back stronger than ever. Thank you so much for watching.